This is the first, last, and only ICT trade model you'll ever need. This is the blueprint that sits under most ICT concepts. Different names, same engine. Today, I'm not teaching 10 models, just one loop you can repeat. Liquidity, displacement, retrace, expand. If you can't point to all four, you don't trade. Liquidity, displacement, retrace, expand. In 10 minutes, you'll have the full blueprint, a daily checklist, and a replay drill. Hopefully, we'll be done in 10 minutes. Quick side note, this is not financial advice, just education and entertainment. This is the loop. Liquidity, displacement, retrace, expand. We're going to be doing this a lot. Now, let's go ahead and let's get to the charts. Chapter 1, the whole model. Raid, displace, retrace, run. That's the loop. You're going to see this everywhere. Different labels, same sequence. We're going to train this one loop over and over again. We've got liquidity, swept, displacement, market structure shift, that's the displacement. We got a retracement into that displacement, and then expansion away. That's the loop. Chapter 2, the number one rule. No displacement equals no trade. That's the account saver. Don't predict, don't chase, wait for intent. If it isn't obvious, you skip it. We do not predict. We wait for the market to show intent, and intent for us is displacement. If displacement never shows up, skip. So in this market scenario, we have liquidity is swept here. Now you can see that the market actually went and continued to take out the previous high, which liquidity is up there as well. So the market took this. But what we don't have is confirmation of displacement, not in the means of what we're looking for. We want a market structure break. Now, there are some that think this is enough, an inversion fair value gap. You've got to break above it, a return into it, and then expansion. That's not the loop that we're looking for. This doesn't always work out. We need intent. And crossing over the fair value gap and inverting it is not enough intent for us to consider it, not without the context. And what we need is displacement, which takes a market structure shift. Chapter 3, Step 1, Liquidity. Okay, for everyone who's a beginner, mark these, save this, screenshot it, put it somewhere that you reference all the time. Previous range highs and lows. That's what we're looking for liquidity. Yesterday high and low, Asia high and low, London high and low, session swing high and lows. Liquidity is just stop orders. Stops sit above obvious highs and below obvious lows. So there's the beginner map, yesterday's high, yesterday's low, Asia high, Asia low, London high, London low. During the session, track the most recent swing high and swing low. No extra lines. Fewer lines equal clearer decisions. Let's look at this chart on this day. We've got previous day high, previous day low marked out. Now, of interest, your lowest low in the previous session swings are London session low, the highest high of the previous session swing highs are Asian session high. Okay. So now at the end of London, we get an 8:30 open New York. Yeah. But we get a swing above Asia high. So we've taken out this liquidity here. Liquidity is just stop orders. Stops sit above obvious highs and below obvious lows. So here's the beginner's map. Yesterday's high, yesterday's low, Asia high, Asia low, London high, London low. During the session, you're tracking the most recent swing high and swing low. No extra lines. Fewer lines equal clearer decisions. So, previous day high, previous day low. Now, we want to track in the previous sessions where was the lowest swing point and the highest swing point. Lowest swing point is London session low, highest swing point, Asian session high. We have at 8:30 open, so we get a sweep above the Asian session high. And here you go, liquidity sitting above the Asian session high gets taken out, and then the market begins to displace. Displacement happens here. And why is it this candle specifically? Well, we have previous swing low, most recent, which creates a market structure shift. So liquidity is purged, displacement, taking out the nearest swing low or swing high, depending on what we're going for. And that causes a market structure shift. And so we see displacement. We have an inverted fair value gap that is taken and filled. And so now we're looking for an entry at this point at the inverted fair value gap. And we get a retracement into that gap and fills it completely. As far as trading strategy is concerned, we'll talk about this later. You can enter right at the beginning of that thing. And now we're looking for targets. We have London session low, target 1. Previous day low is target 2. And this thing continues to go, but that's really what you're looking for. You're looking for those very specific low points. And then if you have daily or weekly biases that this thing should continue going, then that's what you go off of. Now, why do we go after previous day low versus previous day high? Well, we had the Asian session high liquidity taken out, and it did not want to go for the previous day high. That increases the possibility or the probability that the previous day low is what we're going for. And that's what happens. Chapter 4, Step 2, the raid. Raid does not equal entry. We wait for displacement. A raid is when price takes an obvious high or low, usually a wick, sometimes a sweep, but this is where beginners get trapped. They enter the raid, don't. The raid is just delivery. You still need intent. So looking at our example that we had on the charts, we have this liquidity taken here by this raid of the Asia session high. Now, when you look at this, you might be reminded of times when you've entered a trade after liquidity is taken somewhere in the charts, and you have a bias that this high, it's a previous day high, it's going to be taken. This is the liquidity you're seeking for your bias on that day, and then you see this happen. Now your expectation is I'm going to go here. I'm going to ride the market up to the liquidity above the previous day high. And then instead, you enter somewhere in this sweep, this raid, and then it rejects. And then you get eaten up by all of this move because you continue to move your stop loss here, stop loss there, because you believe we're going here. You do not have intent in this move. You have a raid, and a raid does not equal an entry into a trade. You need intent. Intent is displacement and market structure shift. These two must happen. Now, let's say I do have a very strong bias and a high time for reason why we should be going up for these highs versus going for the low. Then there's a couple of scenarios that I would actually look for. I'd want this relatively equal lows here created in the London session um, to get swept first. And then, even more so, potentially, this London session low here to sweep to happen. And then I'd want the market to go ahead and consolidate. Or just give me an outright reversal. And then if you consolidate, it's just a little bit easier to get into a breakout towards the previous day high. But a reversal would need displacement above this swing high at the 8:30 open. And then there would be an entry of a retracement here to go to the previous day high. So even if this action took place, I had the intent on high time frame um, charts that this was our target for the day. I would need more to happen to get into this trade in order to execute it. And an entry going towards this liquidity here at the previous day high. Chapter 5, Displacement. Displacement and market structure shift. Displacement shows intent. Market structure shift confirms direction. No intent equals no trade. Displacement is the strong push away from the raid. Clean candles, urgency, distance. That's the market saying intent. Then we want the market structure shift. Simple definition. After the raid, price breaks, a meaningful swing in the new direction, no displacement, and no structure shift, then you're guessing, and we don't guess. Looking at our example here at the Asia session high, we see a rate above it and taking out the liquidity and then displacement. We have clean, urgent, long candles taking out recent swing low. Now, with the swing low or a swing high, it must come after a raid. After the raid, you get the displacement and a market structure shift, then you have direction. Beginner rule. Enter at a PD array. This is a premium discount array, and you only need one. Pros don't chase the impulse, they enter on the pullback. For beginners, pick one PD array, a fair value gap, an inverted fair value gap, or order blocks. I would start with fair value gaps and inverted fair value gaps because they're just easy to spot. After displacement, price often leaves an imbalance. Wait for price to retrace into your fair value gap, inverted fair value gap, and then look for a run into the displacement direction. Bearish, raid up, displace down, retrace up, and then continue down. Bullish, raid down, displace up, retrace down into your PD array, and then you continue up. One loop. So looking at our example, we say displacement up, continuation down. Now, you have multiple fair value gaps created. 1 and 2. And then you have this inverted fair value gap here. So why did I Why am I going for this inverted fair value gap versus, say, this fair value gap here or this fair value gap here? So when the market structure shifts, you're going to look at, or you're going to look for a retracement into either one of these types of PD arrays. And usually what I'm looking for is a PD array that exists within the market structure shift itself in that displacement. But you don't always get a retracement in this scenario into this area. What you get is a continuation. So it's a strong impulse and it takes out this very fair value gap, which creates an inverted fair value gap. So now this is a stronger entry point than where I would typically want my entries to be. And that's just because the market sell-off was really strong on this day. Chapter 7, Stops and Invalidation. Stops beyond displacement swings. Stops go where the idea is proven wrong. Stops go beyond the swing that formed the displacement or structure shift. If price reclaims that area, your intent is no longer clean, small loss. You move on. So looking at our example, our rate is now our stops. So displacement, market structure shift, RAID has turned into stops. So the swing prior to this displacement is now the invalidation point. That's your stop. The invalidation point is your stop now. Displacement, market structure shift, that's intent. Now we have direction. Invalidation, your stop goes at the previous swing that starts this move. Chapter 8, Targets. This is where you get paid. Target equals next liquidity pool. Previous day high, previous day low, session high, session low, equal highs, equal lows. For beginners, this is what you're targeting. Now, there can be other types of liquidity pools that you can target. There's relatively equal lows and highs, there's fair value gaps and imbalances, weekly gaps, daily gaps that you can go for. But when we're just starting out, and as you're a beginner, all we need are session highs, session lows, and honestly, it's really all you need even if you're not a beginner. Targets are easy. Target the next liquidity pool, yesterday high and low session high and lows, equal highs and lows, opposite side of the range. Looking at our example, here we have the London session low. This is a profit-taking opportunity, and so is a previous day low. So 1, 2 very clear profit-taking opportunities for us. So you can take about 50% off on this first target and then let it run. And then for the remaining 50%, for take profit, that is, standard professional way of taking multiple targets on a single trade. Now, for a beginner trader, take 100% off at take profit 1. This is what you're going for. It's nice, it's best. Take profit on the first profit taking opportunity. There's nothing wrong with that. You're securing capital. There's always the opportunity that it doesn't go to take profit 2, and the conditions of the day might reverse on you and take you out. Instead of you taking profit, now you're taking on a loss. And that's just comes with experience of being in the markets day over day, month over month, and year over year. So what you do is take everything out on the first profit taking opportunity and you study the rest. Chapter 9, Do not trade. Skipping is a skill set. Skip if it's not clean. If it's not clean, you skip. Skip if there's no displacement. Skip if price is chopping in the middle of the range. Skip if there's no clean retracement into a PD array. Skip if you can't label all 4 steps. Pros are going to skip a lot. There are days that you're going to skip because it doesn't give you anything clean. There are sessions that you must skip because it will not give you anything clean. Skipping is okay. Skipping is really good because at the end of the day, your job is to ensure that you preserve your capital and you grow it. You are not out there trying to find every little move. You are trying to find the cleanest, clearest, most confident move that you can find. Now, so in our example, we have a clean and clear raid of this liquidity. We have a clean and clear displacement. We have a clean and clear retracement into a PD array. And we have a very clean and clear expansion and run to liquidity to these targets. When you cannot identify very clearly, very cleanly, very confidently liquidity, displacement, retracement, and expansion, then there's no trade for you. Leave it alone, study what the day is doing, and just move on with your life and come back the next day. Chapter 10, Recap and Practice. Train your eyes. LDRE, liquidity, displacement, retrace, expand. Repeat daily. This loop is all you need for a beginner. This is the perfect place to start. You find liquidity by marking out your previous session highs and lows. You look for displacement and confirmation, a retracement into a PD array, and then you look for the market to run in the direction that the displacement has confirmed. Now, for your homework, open up your replay in your trading view, find 10 examples, screenshot them, label out the 4 steps. You need to train your recognition. You have to get that down first before you start trading and trying entries in a live market. Thanks for watching. I hope this was really helpful for you as a beginner. If you're starting from zero, I hope this gives you a lot onto your plate for you to practice and learn. And then it gives you or gets you started really quickly. And for those of you who have been learning this, I hope this was helpful in adding to what you already know and clarifying some certain things. And if there's any more that you need clarity, please comment them to me and I'll try to clear them up. And stay tuned. Next video, I'm going to go into how to do practice drills for this loop.